What is going on? Welcome back to the channel. So today I want to talk to you about Lucid. I want to go over some of the current data points, break it down on what's really moving Lucid higher today, and go over everything else that you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. And funny thing is, I actually just filmed this video. It was roughly like I spent 10 minutes blabbing about all the data points and everything. And turns out I forgot, I guess my mic was muted, so fun stuff. So I'm going to repeat myself all over again, but ultimately it is up 2.58%, pretty epic day, rather low volume. It isn't actually institutions buying today, rather AI. And so it is up, or I guess the volume, 10.9 million shares being traded, 24.2 is the average. So far, only 2 transactions being done so far on the secondary market above $100,000. One buy, one sell. You could tell that based on the bid, the ask, and the selling price. Today, no news from Lucid, no SEC filings. Even on social media, it looks like just kind of fluff posts, so nothing really crazy of substance linked to Lucid. But today, there's been a lot of different things occurring, one of which was good manufacturing data, so that's what gave Lucid a nice bump up, as well as a lot of good analyst ratings have been coming out associated to Tesla. So you kind of have that behind the scenes, as well as Polestar. So Polestar right now is up 24.1%. So Polestar did put out some pretty good news associated to expansion. All of that combined is being told, or AI is being told to buy because of the trifecta that I just kind of mentioned. So this is where, when I kind of did my video, I said tread cautiously. And at the time it was at $2.60 or $2.61. And because in reality, AI is fun. It's exciting to see it's up 2.58% when majority of the market is red. Like, it's a very fun, exciting day. But as I've said in previous videos, whenever you have volume that's linked to algorithmic trading, there's no support, because as soon as the larger entities turn off the AI, then this is where there is no support and it just trends down. And a lot of the data points I'm going to be talking on today is kind of resemblant of that. One thing that I just wanted to point out is this right here had a nice boost because of this right here. So you did have Harker, so right here, so FOMC member Harker speaks. So in his speech, he ultimately said it's going to come back down onto the data points. And so it's the data points that's going to either derive whether there's rate cuts or hikes or whatever floats a boat. Like, it's going to be, all comes down to the data points, but they're not ruling out any cuts. If anything, they could see 2 cuts in 2024 alone. So I've said this in the past, it's very, very backwards. Like, the market seems to only value rate cuts. Like, that is it. If we don't get a rate cut in 2024, the world is doomed that we know it. And if we do get a rate cut, then yeah, we can live to fight another day. It's very backward stuff. But based on this, there is a 58.3% likelihood in the September 18th meeting of a 25 basis point cut, and then a 5% for a 50 basis point cut. This has gone down quite a lot. So it was at, I believe, 6.7% last. So that was on Friday last I looked at it. So it has gone down a little bit. And this one was at 67%. So now that has gone down a little bit too, which most likely it has gone down a little bit associated to just the fear in the broader market. So let me know your thoughts on that. Going over some data points. Right now, shorts are increasing 2.1 million shares. 28.8% of the free float is being shorted. That works out to be 255.3 million shares overall are being shorted. Cost to borrow average is a little bit higher than the previous trading days, so 31.8%, and then utilization is 97.06. So by shorts increasing, kind of shows that they do not feel today is valid and justified. So this is why I like to analyze this information. And even beside the point, shorts are starting to get back in. You can kind of tell that based on the just overall chart of them. Looking at the options though, 340,000 in calls, 314,000 in puts. Sentiment wise, 55% of all the options being done today are bearish, which, based on shorts increasing the amount that they are, they're probably buying a lot of call options. So in reality, this is somewhat skewed. If anything, it would be a little bit more bearish. So once again, something to keep in mind. Looking at some of the call options that are being purchased, you do see a consensus for it to be above $3 by the end of this week or possibly next. And then looking at puts, you do see a consensus for it to be sub kind of like 250, between 2 and 250. So based on the options, which of course is just merely a sentiment, it does not move the stock price, it's somewhat bearish. So people are anticipating more of a further pull down. So this is again why I like to analyze a lot of the data points, because this is somewhat bearish by looking at shorts. Options activity is somewhat bearish. And even on the chart itself, right now with that $2.59, it is trading between this S1 and the pivot. So AI was able to get it above a very key resistance level. So right now, just watch for this 256 to hold for the rest of today and going into obviously the next couple of trading days. Tomorrow we do have retail sales, so no doubtedly that's going to cause a lot of volatility in the broader market, but still watch for 256. If not, then it will continue its kind of further pullback. On the actual chart itself, so you have this somewhat of a value push higher today, because as I've said in the past, 9 times out of 10, unless it's justified to be outside this boiling band, it kind of has this push higher, as you can kind of see. It does happen opposite ways as well. So typically right here gets pushed down, right here gets pushed down, and vice versa. Right here gets pushed up. So this is more of just to do with the technicals as well. Stochastic, you do see a nice bullish deviation, so white line above the red, but it is considered very oversold at around 10, and number of retail investors are getting in today. So you kind of have institutions not really buying the hype, if that makes sense. You have retail loving this green day, but like I've said, I guess on my previous video when I recorded it and just without audio, kind of just tread cautiously, right? So there's still a lot of negativity in the broader market. Just whenever someone mentions interest rates, like especially when being cut, like, oh man, everyone gets, oh my god, excited, and then I don't know. So just tread cautiously. Lucid does have a lot of good things going for it, and that's very apparent based on the 2 recent conferences that Peter did participate in. We just have to be patient. I know that's one of those things that people love to hear is patience, and especially Lucid investors, like 3 years being patient is kind of pushing it. But at this stage in the game, I don't know, it's either you're in or you're out, because Lucid is a very required taste, because their product is good, but I feel like just there's a lot of things that needs to change about it. But without further ado, I appreciate all you guys watching. Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And then one final thing I just want to share with you, take advantage of this promo. Simply sign up for a new account, throw $100 at it, and they give you 5 free stocks. Each stock is valued up to $2,000. Kick-ass deal, link in the description below and also the comments. With all that said, appreciate all of you watching.